Thank you, ladies and gentlemen, for joining us. My name's Dominic Piper. As Bill said, I'm the editor of Paydirt and Gold Mining Journal and your chair for this session. I'll introduce everybody again. We have Peter Bradford, Managing Director of IGO, next to me. Next to Peter is Victor Rajasooriar, Managing Director of Panoramic Resources. Next to Victor is Tony Rovira, Managing Director of Azure Minerals. And next to Tony is Todd Ross, who is Managing Director of the soon, tomorrow in fact, to be listed Nordic Nickel. So you've missed out on the IPO, but keep an eye out tomorrow as soon as it hits and you can start buying on market. As you can see, we've got a very diverse lineup of speakers, diverse from a company sense. So we've got a lot to get through and a lot of questions to ask, but please, as Bill mentioned, we will have roving microphones around, so if you've got any questions, comments, opinions, please raise your hand after a few moments. I'm more than happy for somebody else to do the work. It's a really exciting time for nickel. As Bill said, we're going back to 2 days for the nickel conference. It's been a remarkable 12 to 24 months for the sector, and probably a remarkable decade in the fact that we've gone from crises of the emergence of nickel pig iron to the elation of the emergence of the electric vehicle sector. We've seen massive discoveries. We're seeing M&A activity now. We're seeing companies fall over and reborn again, and hopefully we'll get through all of that in the next 50 minutes or so. Where I want to start is in the immediate here and now, and it's a question that both myself and my colleagues, Michael and Fraser at Paydirt, have been asking essentially every single managing director and CEO that we've met in the last couple of months, because it is a key issue for everybody in that. And I'm going to start with you, Peter. Costs. We're seeing cost inflation across the board. Generally, we're looking at 6% inflation in Australia. Have you been able to identify what the inflation is in your operations, and how are you dealing with these cost inflations?
Is this working?
Yes.
Perfect. There's no warm-up here, is there? Straight into costs. Even when we have investor meetings, they're a little bit softer than that. But yes, costs have gone up, and across our businesses, and it's no different to everyone else in operations, fuel price has gone up, the cost of people has gone up with a lot more competition in the sector, and we're seeing cost increases across transportation, both bringing materials into the site and shipping our concentrate away from the site. So a lot of cost pressure. At IGO, we've been working to obviate some of that by working on continuous productivity improvements. So on a dollar per tonne basis, we have kept our overall cost structure on site relatively flat. And then if you look at our quarterly reporting, each quarter, you'll see that our cash costs of production, dollars per pound of nickel produced, has actually been running well below our guidance range. And that's because we're getting a bit of a free kick from the higher byproduct credit pricing for the copper and the cobalt in our production. So yes, we're getting the pressures, we're obviating some of that with productivity improvements, and a higher pricing for copper and cobalt is helping. Ultimately, that lucky band will stretch about as far as it can stretch, and then we would expect to see some of those costs come through in our headline numbers.
How difficult is looking at individual cost areas? How challenging has the labour environment been, not just from paying increased salaries and wages, but in being able to find the skilled people to implement those productivity improvements?
Like as an industry, it has been a real challenge, and I would think that every single person in this room has faced that challenge. And at IGO, it's no different. And the way we tackle that is by working to develop what we think is an iconic culture in the business. That helps us to both attract and retain the very best people. And as a result, our voluntary turnover rates within the business are sitting around 15%. And my understanding, I don't know what everyone else's business is doing, but my understanding is that's towards the better end of the industry. And as part of that recognition of the culture in the business, we get a lot of interest. So the most recent job that we advertised that I saw the numbers for was an analyst role in our BD department, and we had 100 applications for that. So just a lot of interest, and but it masks a general tightness in the labour market. What we've done to address it, in addition to culture, is we've tried to maintain competitiveness on salaries. So it's a hygiene factor. If you don't get the salaries right, people don't even look. But we've also focused on our benefits, and focusing on benefits that attract a wider audience into the business. So really good parental leave programs. And to get people back in, the opportunity for flexibility of work, with a number of people coming to the business and working part-time and reintroducing to the workplace. So that's been a real winner for us. And then most recently we've introduced health insurance across the business, which is a really positive improvement in our overall benefits package.
Thanks, Peter. Victor, can I ask you a similar question? And you've been battling similar cost pressures, but you've been doing it while ramping up an operation as well. Can you tell me a little bit, first on the issue of labour and attracting people? Because I know in previous incarnations of the Savannah mine, it was very difficult to get people to commit to working on that project. How have you countered that in this ramp up?
Yeah, thanks, Tom. Listen, very similar feedback to what Peter was saying. One of the things we did differently when we restarted, we changed the strategy to a contractor model. So mining is done by a contractor, the processing is done by a contractor, and they're able to bring in people from their various projects, so that certainly helped us get people. On the technical side, so we've got about 40 people who are technically oriented on site. They are Panoramic employees on site. We only hired these guys like last year. July last year is when they started. And I think we might have a better turnover than Peter, actually. Because out of the 40, we lost 5, and then 1 returned 3-4 weeks ago. So they do like the culture, and as Peter said, listen, culture is very important for us. That helps bring the people in. The biggest turning point for me was in October, when the border shut between WA and Northern Territory, where we get a third of the workforce from. That basically meant that we lost about 30% of the staff for the site. And then it got lifted in March, and most of them were able to come back to site. So so we are able to see that dedication to the site, and we've got a unique site. So it's the roster is 2 on 2 off. It's a beautiful part of the world. It's not like Kalgoorlie. And I think, people like, being in somewhere different, So, yeah, I think we're on a good place at the moment with labour. Cost, certainly, it's very hard when you're ramping up and trying to manage cost at the same time. When we did the feasibility in April last year, we put a plan together, and we said the site guys, I said to them, listen, you have to meet the targets, we just have to be dedicated and push through. Our CFO grant watches every cent. And I took the easy job, and I said to them, listen, the feasibility is done on $16,000 a tonne nickel. Leave the nickel price to me. I'll work on that, right? And now it's nearly doubled, right? So cost has gone up, and sure, it's by a certain percentage, but the commodity prices certainly has, pretty close to doubled, and that's actually helping us, see through this process at the moment.
And how has supply chain management and supply chain issues affected that ramp up as well, not only from a cost perspective, but a logistics perspective?
Yeah, definitely. Listen, I remember Barminco when they were getting trucks in. Some of them couldn't land in Fremantle because there was a strike in Fremantle, so they have to take it to Brisbane. So our larger equipment did get delayed, but they eventually got to site. And we see parts like even mill balls now, the price has gone up. It's not readily available. But because you've got, one of the good things is because you're relying on a contractor on the mining side, they're able to get the parts from, various projects. And same with Primero on the processing side. They're able to help us out in getting parts. But the whole logistics routes is tight. The price has gone up. I think we might see that for the next 12 months to 18 months. But you would think it's all going to come back to a normalcy. When the borders all open, China gets back to normal, you would think, it has to get better.
That was going to be my last question to you both before I turn Tony and Todd. How long have you forecast that these cost pressures, these inflation pressures will last?
Yeah, in our model at the moment, we are running at about over 18 months, is what we are saying. if things get better, happy days.
Peter?
We take a more simple approach, so whatever costs we're getting, we escalate those going forward. It's really hard to see how we reset back to an old normal, and I think we're just going to be looking at a new normal going forward on costs.
Thank you. Tony, Todd, I'll start with you, Tony. Costs, it's a slightly different scenario for an explorer. People aren't testing you on your cost per tonne, but you certainly are seeing money go out the door every day and have to ask for it back off shareholders. How is costs, particularly labour and input costs, affecting your exploration programs and your approach?
Yeah, certainly with costs, things are going up. We all know that. Azure was a little bit fortunate in that we acquired the Andover Nickel project in early or mid-2020, which was prior to the rush on getting projects. And then we were able to staff up the company almost fully in the few months after that. So we were in advance of the rush on people. So we were actually able to get a really good crew of people hired into the company prior to there being the skill shortage and the need for a lot more people. So that set us up really well. But having said that, going forward, obviously to keep people, we need to look after them financially, which we hope that we do. And also just you're looking for consultants, and consultants are really busy, and their costs are going up. So they're putting their bills up too. So we're in the middle of a program of doing the development studies, scoping study on the Andover project. And just finding consultants to be able to do the work and to be able to do it in a timely fashion and to be able to do it at a reasonable cost is quite difficult. So yes, across the board, the costs have been increasing.
And for access to drill rigs, and then also at the other end of that, the lab?
Yeah, I think there's more than enough drill rigs in Western Australia. There just wasn't enough drillers to operate them. And maybe, just maybe, that's starting to turn around now, and more people are coming back into WA to fill those vacancies that are in the drilling companies. The laboratories, well, and that's our 8-week turnaround's gone out to 12 weeks now. It's just whether it's just because there's a whole lot more people taking samples and sending them to the lab, but also just the shortage of people at the laboratories as well. And yeah, that turnaround time in the laboratories is proving to be quite a challenge for all of us.
Thanks, Tony. Todd, as the name suggests, Nordic are in a completely different part of the world, but are you seeing the same cost pressures that we're experiencing in Western Australia?
Yeah, thanks, Dom. Yeah, well, look, as you say, it's a brand new story. Nordic Nickel will list tomorrow. We've got 12 million raised in the bank. It's now up to us to manage that wisely. We haven't spent any of that money yet, but we are fortunate in that we had already developed some partnerships, key in-country partnerships with Magnus Minerals, who are a geological consultancy firm. A couple of our colleagues have come over from Finland specifically for the lunch today, Dom, and they have a team of geologists within country, and we're fortunate enough that we have that partnership already. But on top of that, and importantly, to the point around drill rigs, Finland is no different. We're based up in the central Lapland Greenstone Belt, northern part of Finland. Drill rigs are at a premium. It's difficult to get hold of one. Again, we were fortunate enough that we were able to do a deal with Kati Drilling, which is a large drilling contracting firm in Finland. And we secured a drill rig, which has now been delivered to Finland and will be available for us for our entire drilling campaign. So we've got exclusive use of that drill rig for 3 years. We'll be drilling the beginning of next year. Hopefully things go really well, and if we get into that situation that we need to get another drill rig there, then we'll deal with that, but that'll be a nice problem to have. So the plan is really to be able to activate, obviously, that drilling program as quickly as possible. But I think we're fortunate enough that we've got those partnerships already that will help us over that process.
Great, thanks. Peter, you complaining a little bit there about costs. We've gone hard, so I'm going to make it much easier now. Let's move to exploration. When are you going to find the next massive nickel deposit, and where is it going to be? Sorry, more generally, when we look at exploration, we've got 4 companies here, none of which are in that traditional Kambalda, Widgiemooltha, Leinster belt, or their main assets certainly aren't. We're seeing more nickel exploration. We're seeing new listings, new IPOs, and new ground. We're seeing more drilling occurring for nickel. are we going to see, as we have seen in gold, really, a renaissance of discoveries in new terrains and new areas in this next decade as a result of this blossoming of nickel exploration?
We certainly expect so, and don't we, Ian? Ian Sandals, our General Manager Exploration. He has to agree with me. But that's been our thesis, and we're spending about $65 million a year on exploration, and that's across a portfolio of belt-scale projects in Australia focused on copper and nickel, and it's about 50% nickel. And our expectation is that over a period of time, that investment in new nickel sulphide exploration is going to drive a succession of new discoveries, the mines of the future. The focus for us over the last 7 years has been around Nova and on the Fraser Range. We've got 12 or 13,000 square kilometres on the Fraser Range and have systematically explored there, bunch of targets, testing the targets, and some targets we haven't even tested yet. So that remains very much a work in process. Also exploring up in the Kimberleys, so right next door to Victor, so we're neighbours there, and very much looking for the same sort of deposits. Nova-style mineralisation within a suite of rocks that we believe is very similar to what we have on the Fraser Range. And we'll do our first comprehensive drill program later this year after having identified targets through boots on the ground, field mapping and geology last year. And then the last emerging area for us is a portfolio in the Northern Territory, Raptor and Irandina, where we are doing the early stage work, mostly geophysical, to be ready to start exploring there in the coming years once we finalise access agreements with the Indigenous owners.
Thanks, Peter. Tony, when Azure decided to pivot away from Mexico and your Mexican assets at the start of COVID and come back to WA and nickel specifically, was it a deliberate move to look outside of those traditional nickel fields and into a region that hadn't really been explored for nickel before?
Definitely not. It was not a deliberate move. It was more fortuitous, and that when I approached Mark Creasy and asked him if he had any projects that he would consider vending into the company, he just happened to have his favourite nickel project located up there at outside of Karratha. And yes, it was an area that had not really been thoroughly explored by any means, and probably well underappreciated. But he was a believer. And as we know, Mark has been very successful over the years with his belief turning into true discoveries. And so we had a good look at the project and say, yeah, actually this does have potential, but it's just been underappreciated in past years. And so we had a crack at it, and all of a sudden here at Andover we got 70 square kilometres of mafic, ultramafic intrusion, which is delivering good discoveries at a regular basis, and we can actually walk across the countryside, or I can say our geologists can walk across the countryside and can find examples of outcropping nickel and copper rich gossans at surface in multiple locations. So I guess that just goes to show that here is a project which is located 5 kilometres outside the local town of Roebourne. It's got a couple of roads that cross it. It's got all the infrastructure you could possibly need in that area, and yet hasn't been properly looked at. So deposits can still be found in outcropping areas in Western Australia. I know the challenges that Peters and his crew face out in the Fraser Range with the deep cover and the lack of outcrop, but you can still find things in areas of outcrop in Western Australia, which is quite remarkable.
Did that inspire you then, or get you thinking that there may be other areas and that are still prospective for nickel that show similar characteristics?
Well, yes, it did. It inspired me. I wish it had inspired me enough to look at Julimar before that other group did. But there's got to be other areas out there in Western Australia which are still underexplored or underappreciated. And there will be more and more discoveries made. Just as we get to know things better, we get to understand the geology better. And like right now, where you can raise funding, you can raise the money, you can get out there and do your serious exploration, there will be more discoveries to be made. And like up in the Kimberley, that area up there is totally underexplored. So there's good opportunities everywhere.
Victor, you've had your hands full with a ramp up, but with the discoveries of Andover and of Julimar and of a few others, has that had your geologists and your exploration team itching to get out and get a few more dollars to start spending on exploration?
Did you say IGO geologist? Listen.
No, I didn't.
Listen, so we've got a very small geology team, and our budget is very small compared to what Peter was talking about. So we are spending about $3 to $5 million per year. But as Tony said, the ground is actually underexplored. So we've had this tenement package that is, we've had it for 20 years. And the north of our tenement package, there's absolutely no drill hole. We've hardly done a heritage survey, and there hasn't been any downhole EMs to follow up. So there's still virgin ground that needs to be tested. And now that we are, the ramp up is going well, we'll be generating cash, we'll free some of the funds to start opening these areas. So we've got a pretty switched on geology manager. I reckon he's been with the company, I reckon 15 years. He left, went to Western Areas for 4 years, saw the light, came back to us. He's been here 2 years. So it should be, I reckon he'll find one for us. Yeah.
That's great to hear. Todd, you've forgone WA altogether and have gone to Finland. Can you explain the rationale behind heading to that part of the world?
Yeah, well, look, I mean, we're looking at a number of different projects, and in my career, banking projects in Kambalda and West Australia in the nickel space for over 20-odd years. You see a lot that you like, and you see other things that you probably would never want to bank. I got the opportunity to get talking to the Magnus team a couple of years back. The project, when one of our directors in Hong Kong was looking around for battery metals projects around the world, the Magnus team had this project called Pulu, and Pulu really is very unique in that there's been some historical drilling done by Outokumpu back in the day, back in the 80s and 90s, and I think when we got the opportunity to have a look at the drill core that was done, these 51 holes that was done previously on our Hot and Vara licence in Pulu, it was pretty evident early on that there's large disseminated nickel across the belt. We're talking sort of very large but low grades disseminated nickel. What was a game changer, I think, in the Central Lapland Greenstone Belt many years ago was that the Sakati deposit, which is owned by by Anglo American, which was discovered by Anglo American, they were using modern geophysics techniques and downhole EM, fixed loop EM, and that hasn't been utilised really to any extent in the Central Lapland Greenstone Belt. So I think what attracted us there is that we know that there's large amounts of near surface disseminated nickel. We know that geophysics is a really, really handy tool to follow up on downhole EM in particular. We've already been able to undertake some downhole EM on those holes that were drilled back in the 80s and 90s, and we're getting some really interesting conductors. The fixed loop is already showing us some really interesting conductors as well. So I think it's the potential for a completely new province to be opened up. On top of that, the fact that it's in Europe, it's in a market that is, the second largest battery manufacturing hub outside of China, screaming out for nickel sulfides, class 1 nickel, to be delivered into that market. Finland has the only smelter in the whole of Europe, 2 refineries in Europe as well. So there's a lot of factors that sort of all came together, starting with obviously really prospective geology.
It's interesting that you bring up the factor of battery minerals and the European context of Nordic's projects, because it strikes me that for most of the past 20, 30 years, any nickel discovery, particularly in Western Australia, was almost immediately linked to BHP Nickel West and went through that structure to end up as a finished product. It seems now, with the emergence of electric vehicle demand and new markets, new demands, new supply, that there's an opportunity for other players to be involved in this sector. Peter, is it filtering down to as far as the exploration sector? Are we seeing on a global perspective new groups exploring in new regions and looking for new nickel opportunities that we didn't see 10 years ago?
I'd say if there is, it's only really around the margins. But I think with the interest there in finding more reliable sources of ethically produced nickel, there's going to be great opportunities to collaborate, and you will potentially see collaborations between battery companies, car OEMs, and your typical explorers and miners in the search for and the production of nickel in the future.
Looking at the wider EV thematic, is it fundamentally changed the shape and the structure of the global nickel industry?
It has, and it's still shaping it. Around the margins, nickel into EVs is only a very small part of the supply today, but that will transform over the coming 10 and 20 years, and that's going to drive demand for increasing amounts of nickel. It's going to cause us to want to go out there and find those mines, and it's going to cause a higher overall price, an incentive price to stimulate that exploration, and along the way, it's going to create new opportunities for nickel companies. So instead of producing nickel for stainless steel and going down the route of BHP that we've all done in the past, there's going to be opportunities there for independent nickel producers to consider going downstream with their nickel production and not producing nickel metal, because you don't need nickel metal for electric vehicle batteries. You need nickel sulfate. That's why I've got my nickel sulfate tie on today. It's got nothing to do with the election results. And our aspiration at IGO is to do exactly that. We've done a little bit of work there in the past. We're getting ready post the Western Areas transaction to kick that off in earnest again, and aiming for a financial investment decision on a nickel sulfate facility by mid-2024.
And I think, given that the name of the company was Independence, wearing a teal tie is an incredibly pertinent point. Tony, are you seeing this interest from new groups and from new investors? Is it filtering down to an exploration company like Azure? Are you fielding interest from investment groups that you would never have expected before?
Dom, let me just say we're more than just an exploration company. We're in the project development stage, so yeah, we're a development company. But the answer to that is yes. I mean, both here in Australia, we've had a number of organisations reach out to us and express interest in what we're doing and talking about potential collaboration in some way, shape or form further down the track. But also last week I was at a one-to-one conference in London, and quite a few of the people I spoke with over there were interested in what was happening in the battery metal space in Australia and trying to find a way of gaining some exposure to it. So there's certainly a lot of interest, not just locally here, but in Europe and the UK as well. And that interest extends to, it could extend to anything from just wanting to participate in the company by being a shareholder to maybe being involved with the development or being involved with the offtake and the like. So there's definitely a lot of interest out there.
Victor, a similar question to you. Are you seeing new groups and not only traditional investors, but as both Peter and Tony have said, OEMs or battery manufacturers contacting you and showing interest in Panoramic?
Yeah, so going back 12, 18 months ago, when we were refinancing the project, we were looking for like $45 million. And at that time, we were in the middle of COVID. The people who were willing to help us out at that time were mainly smelters. They were the ones with the funding available, our offtake partners. They were the groups that were available to us. And we ended up getting a really good deal. But what I find now is you do see the Japanese, the Koreans who are more downstream, trying to tap into projects that we have on the ground where they're prepared to sometimes fund it, but it's still all talk. But that was talk that didn't happen 18 months ago. So that's kind of new to me. But let's see whether anyone else nails something like that. But I think there's definitely opportunities there.
Yeah. Todd, even more so in Europe, I imagine, where the European Commission is talking billion-dollar budgets to support localised domestic supply chains, and there's plenty of green funds and clean energy funds to tap into. Is that an avenue that Nordic is going to pursue when the time comes?
Oh, look, absolutely. I mean, we're fortunate in that obviously we decided specifically to list on the ASX because we know the market here understands junior exploration companies, and in particular nickel. But on the flip side, we also have a huge amount of interest coming out of the fact that our project is right there in Europe, in Finland, where there is the only smelter and the only refineries in that region. There's a lot of incentives being put in place in terms of what Europe is looking to try and do and achieve. 1,000 gigawatt hours of new production capacity being announced, battery cell manufacturing in Europe in particular. 20% of that's going to be in the Nordic region. In terms of what we see in the future there, we're certainly going to be targeting those investor groups that will want to be involved in that. In particular, Finland is one of the first countries in Europe to come up with its own national battery strategy. So, they've got everything from the raw materials, so from the the exploration stage that we're obviously focused on, right the way through to battery recycling, ultimately at the end of the circular economy. So there's a huge investment and a huge amount of support there, particularly from the Finnish government, but also throughout the European Union as well.
Peter, with this move, and IGO has been very vocal in its explaining its strategy of moving to clean energy metals. With that move comes other responsibilities or requirements for total transparency and clarity about your ESG strategy. How successful have you been in prosecuting that strategy to investment groups and potentially offtake partners? And is it an ongoing development?
Yeah, it's actually an interesting dynamic, because we started our ESG journey before we changed the strategy to focus on the clean energy metals, and then the two of those became very symbiotic, so it's been a great journey, and our first sustainability report was back in 2015, and every year we just tried to make the next one a little bit better than the previous one, and that meant we had to do a little bit better at our practices within the business, and then how we transparently reported that, but also the language within the company and outside the company. Where we are today, we've got a globally recognised ESG brand. What we do and how we report it is globally recognised, and for instance, most recently we're included in the S&P Global Sustainability Yearbook, second year in a row, and that recognises the top 15% for sustainability reporting across each segment. And so for the mining and metals, there's about 22 companies globally. We're the only Australian company in that mining and metals group. So great recognition for what we do on the ESG side. But it's not something where we've got a group of sustainability professionals who just do that. We actually don't have a sustainability team. That responsibility to do the right thing and then to pull together the reporting, it's across the whole business. So it's actually embedded in the DNA of the whole business. And I think that's a great outcome, because we're actually doing the right thing right across the business.
Victor, are you seeing a greater push from investors on this ESG side of things and the connection with nickel as a battery mineral?
Yeah, very, very much. So when we were in care and maintenance stage, so 18 months ago, we had just under 5,000 shareholders. Now we have about 9,000 shareholders, right? So it's double, because you're in the nickel space, it's a clean metal space. Last month, I went on to Sydney and Melbourne to meet the institutions, and they actually all started off with ESG questions. And you sit there and you go, it's very different a few years ago. Mind you, I was in the gold space at that time, but it's all about how much fuel are you burning, what are you doing ESG-wise, even downstream to the to the smelter end, they were trying to find out, right? So I think everyone's getting more educated, and I think that's why everyone's on board with this clean metal, on the path that we're on at the moment.
Tony, as a project development company, are you building those ESG, particularly, I suppose, around decarbonisation? Are you building in those expectations and those strategies at this stage, or is that something that comes later?
No, most definitely we're doing it at this stage. In fact, we've probably been doing a lot of the ESG components for 20 years. We just haven't documented it. But now it's all about documenting, recording, reporting, etc. As I said, last week I was in London and I gave presentations, one-on-one presentations, to I think 23 individual people over a 2-day period. And of those 23, I'd say 10 or 11 of them were opened up straight away with the ESG questions, and the presentation I was giving has ESG slide as the number one slide in the presentation. And they commented about how refreshing or pleasing that was to them to see that it was up front in what we're doing before you got into the project or the corporate pages as well. And that was brought home really strongly recently when I sat in on a presentation that a lawyer in Paris was giving on some new legislation the EU are bringing in, which is the traceability legislation that's coming in. So, for example, in a couple of, which is in the next year or so, it's going to be passed. So in a couple of years from now, if you're buying a car battery in the EU, you have to be able to trace all the components of that car battery back to the original mine they came from. So in the EU, there will be a government department which would be auditing that trail all the way back to the nickel mines in Western Australia to see that the companies that are actually doing the mining are reporting and are adhering to a proper ESG strategy. So yes, this is something that we need to take on board very seriously and run with it very strongly. It is the most important part of an operating company.
Will this have a effect then, if they're tracing the carbon footprint of the nickel product that goes into that batteries? Is that going to have an effect on West Australian miners and your downstream value addition ambitions? Peter, you've investigated value addition here in Western Australia. Does it make it more compelling in a situation like that?
Yeah, we have to believe that that's where it ends up, and that there's going to be a premium for green, so to speak, and that premium for green is going to cover all of the elements. So sustainably, ethically, reliably are made, and that's part of the value proposition of being able to do that in jurisdictions like Australia, and to be able in the future to get a premium for whether it's nickel sulfate made here versus somewhere else, or whether it's lithium hydroxide made here versus somewhere else.
Great, thank you. Well, I've done enough work now. It's up to you guys. You've all eaten and had a couple of glasses of wine as well, I hope. Have we got any questions from the floor? I'm sure we do. Our Paydirt team are roaming with the mics. Oh, yeah, we've got one just here. Mel, just.
Hello. G'day, guys. Thank you very much for the talk. Fergus Kiley, Nico Resources. Got a question for Peter. Just interested to know, in sort of 2017-18, you mentioned that IGO looked at sulfate processing in Western Australia, and the culmination of that study was I guess a lack of suitable supply or a long term of suitable supply coming out of the Nova Bollinger mine. I'd be interested to know from a corporate perspective now why you think post-transaction with Western Areas, Spotted Quoll, Flying Fox coming off, Nova coming to an end, really only having Odysseus, why you believe that you've got enough volumes to make a sulfate processing facility work in Western Australia in an increased inflation capital cost environment.
Yep, sure. Yeah, it's all about that longevity of the nickel units. So with the Odysseus AM5, AM6 development, circa 11 years of production of nickel sulfide concentrate there, and with the ability, subject to studies on Mount Good, to be delivering nickel sulfide concentrate for longer, and we believe that there's enough visibility there for us to reactivate that work, and not starting from scratch, because we can leverage off the work that we previously did, and therefore we're setting quite an aggressive target to get to a FID by mid-24, and then it's probably an 18-24 month build time after that, and we believe that that's going to give us enough runway then to get a capital return on that nickel sulfate. And if we don't do the work to bring us to the FID, irrespective of what that FID decision is, then that's a wasted opportunity. So we just need to seize that opportunity and look at that today.
Great, thanks, Peter. It goes back to a question, again, Tony, about developing Andover at a time when the landscape is much changed. Have you had discussions about how you would approach development and offtake and marketing? Is it much changed from your days when you were discovering Cosmos with Jubilee?
Yeah, definitely much changed. Yes, we are in that development study stage, and so all those components that you just mentioned there are certainly being considered by us and being worked on by the various consultants to put together into initially the scoping study and then move forward to the feasibility. But whereas between 1997 and 2000, there was a 2.5-year period between the discovery of Cosmos and making of the first concentrate, 2.5 years to bring a mine on stream. Now it's obviously much, much longer than that because the various studies and obligations that we have are much greater than they were back at that time 20 years ago. So yes, things are very busy.
Todd, do you expect it would be easier if you find and develop a project in Finland? Will that value addition either on site or locally be a much easier proposition given what you said about the Finnish industry and the Finnish government's attitudes?
Yeah, look, I think we'll have to wait and see, I guess, what support we get. But at the moment, there's certainly a lot of, a lot of incentives there to do that. I think one big advantage we have, as I mentioned before, being based in Europe. We talk about scope 1, 2, and 3 emissions. The cost of transportation and all those other things that go into scope 3 emissions. The fact that we are right there, close to a smelter, close to refiners. Close to battery cell manufacturing plants that are being built all around us. I think there will certainly be lots of incentives and lots of encouragement for us to try and develop that.
Thanks. Have we got another question? Yes, we have. Just over there, Mel.
Hi guys, Fletcher Tracy from Brunel. And this is the question to the whole panel. And Todd, you just touched on scope 3 emissions then. Obviously scope 1 and 2 is directly manageable by you as an organisation, but scope 3 is your supply chain and very much indirectly out of your control. How important is it for you moving forward to have compliant scope 3 suppliers across your whole supply chain, and will that factor into your decision making when bringing on new suppliers or getting rid of existing suppliers moving forward?
Victor, do you want to take that one first?
Peter.
Yeah.
No, that's a really good question, and I can only talk to what we do at our IGO. So we're doing a lot of work around our scope 1 and 2 on the mine site, and at a corporate level, we've got an aspiration to be net neutral scope 1 and 2 by 2035. But at an asset level, we take a much more aggressive view, and at Nova, we can envisage being net neutral by circa mid to late 2024. And so that's quite aggressive, and doing that with a combination of initial solar farm, new solar farm this year, some renewable batteries, reduction of carbon generation, but also putting in place our own offset programs. On the Scope 3, the challenge we've set ourselves this year is to really understand what our Scope 3 landscape looks like, because we don't want to go making wild claims about what we can do on the Scope 3 and what's achievable until we understand it. So come the end of this financial year, we'll have a better understanding of that, and we'll start to articulate a strategy. But it doesn't mean we're sitting on our laurels. We're already starting to talk with some of our Scope 3 contributors to talk about what they could do differently. Yeah.
Victor, I imagine in a scenario as Panoramic, where you've got both contract mining and contract processing, that it's really about the partnership and the conversation you have with those groups.
Very much, but at the end of the day, we are responsible for the sites. We are very much concentrating only on scope 1 and 2, and that's our long-term plan right now. I mean, we've just started the project, so the focus is around 1 and 2, 3 maybe down the track.
Great. Another cracking question. Have we got any? We must have other questions. The amount of nickel executives that were in this room. There must be another question. No, back to me then. Peter, can I ask about on this very question of decarbonisation and scope 1, 2 and 3 emissions? What role is technology going to play in ensuring that mine sites are net neutral, carbon neutral by 2035, you said? Is the implementation of renewable energy, but then also battery electric vehicles and the like going to play a huge role?
Yeah, absolutely. And even with Nova at mid-mine life, we're implementing measures there. Technology-based solutions to reduce power consumption. So new control systems on the vent fans make a dramatic improvement in this financial year. And if you were designing Nova from scratch today, you would be looking at the electric vehicle options or the conveyor options that you could use to replace diesel equipment underground. And then a larger renewable energy farm at surface to supply the energy for that electrified underground. So definitely we'll see a big transition over the coming years, and through our collaboration with Barminco, we're trying to get ahead of the curve on testing a number of these underground at Nova for application in future mines.
Victor, it must be quite difficult as a smaller company in ramp-up phase to load on more risk by testing new technology in this regard. What's Panoramic's strategy around it?
Listen, for us, the first thing is on the surface to not rely on diesel, right? So it's all about solar panels. We're just going through the studies at the moment. The second phase for us is actually getting the underground fleet converted to electric trucks, right? And very similar to what Peter and we got Barminco on site as well. When we set the contract up with them, it was a 4-year contract with the whole idea that 3 years we'll run on diesel, but the 4th year new fleet starts arriving that are more diesel, more electric friendly, either batteries or just pure electricity driven. So that's the path we are on at the moment. If everyone gets their duck in the row, we'll actually get there. But it's just at the moment, it's all about getting the biggest bang for our buck would be the underground fleet going away from diesel to electric operated.
And in the process, we drive more nickel demand, right?
Yeah.
That's right.
Tony, Todd, is there the use of the emissions targets, is that already having an effect at the exploration and development stage? Are you starting to scope out your emissions? And when you said, Tony, before about ESG questions, are they specifically decarbonisation questions?
Not just decarbonisation questions. Obviously, the area we operate in the West Pilbara is a delicate area culturally, and we need to be very careful about that side of things as well. So it's not just the emission side of things that people are asking about, but we're certainly considering the emission side of things in our development studies and whether what sort and how we implement renewable power on there. If, for example, we were to have a mine up and operating, say, 4 or 5 years from now, then there's a good chance with the advances in technology that we could be all electric vehicles and that sort of thing, and be completely almost off the grid, if you like. And so we see that as being a very important of the studies that we're implementing now.
Todd?
Yeah, look, I mean, the drive for decarbonisation, obviously in Europe, is a massive focus, and I think for us to be able to operate there, we'll get a lot of support given the commodity that we'll be producing, hopefully, ultimately into the battery metal space. But we have to do that, being conscious of, the environment that we operate within, the local community groups that we operate with. So we have to have that licence to operate and continue to be able to have those relationships and operate in an effective way. I mean, we talk about traceability and sustainability, and that is what our strategy is all about. So it's going to be a strong focus.
Great, thanks. Oh, we've got another question. Thank God for that.
Thanks, gentlemen. Conrad Wilkins from WGA. So, Tony, you mentioned just earlier about the tight market in terms of finding engineering and service providers. How do you feel like the industry can support that? And do you think that it's going to be a handbrake on developing a new projects, getting supply into the market?
I think it was a bit of a handbrake over the last couple of years, certainly while the borders were closed and we couldn't have any new consultants entering into the state. But with the borders open now, I think that the engineering and consulting firms are being very active in their recruitment drives interstate and internationally. So I foresee that over the next 6 to 12 months, things should loosen up and we should have that if not back to normal, but would at least have a greater availability and flexibility in who we can use.
Peter, did you have any? Well, in fact, let me ask you a follow-up question. We're talking about the next 6 to 12 or 18 months. What about the longer-term future? Is there an opportunity? It feels like we've been talking about a skill shortage, particularly in the professional ranks, for a decade now. Is there an opportunity for mining as a key component of the decarbonisation and switch to clean energy sources? Is there an opportunity for mining to become a more attractive proposition for young professionals?
I certainly think so, and we see that when we interact with people within our business, and you know, they're attracted to the nickel, the lithium story, and the fact that we do focus on those clean energy metals that are going to contribute to a better planet for future generations, and that really resonates with people coming out of university and young people generally, and even resonates with middle-aged people like myself. And we get similar messages back when we talk to, you know, our joint venture partners at Greenbushes and at Kwinana. You know, that part of their value proposition for employees is the industry that they're involved in, and people want to come and work for the lithium producers. So very much, and I think going forward that'll get reflected in more people choosing to consider careers in mining that it might have done in the past when mining was just considered, you know, the dirty end of the business that you wanted to walk past quickly and close your eyes to.
Thank you. We got another question? Yes. Oh, they're all going up now. Oh, over here. Sorry.
Yeah, John Germanetti from AMPS. So, Victor, you mentioned part of your strategy with regards to reducing Scope 1 emissions is electrification of the fleet. Obviously, there's a different level of carbon intensity when you're open pit mining a high strip ratio mine versus an underground mine where you're selective mining. And I think the underground space is leading the pack with regards to electrification of HME. With that in mind, would that impact your investment decision if you were considering an open pit operation? I know that you're predominantly in the underground space, but would that change what you're looking for or change whether you would consider a higher strip ratio open cut mine?
Listen, so we are quite deep, right? So the open pit in theory won't work. However, if there comes a time when you could strip more material with diesel fleet and offset the electric vehicle, I think we'll actually go the electric route, because I think social responsibility kicks in, and I reckon that will drive decision-making processes as well. And I think that's the way we think anyway.
Great, thanks. Great question.
Dan from Western Areas. So what a pretty bunch of people. And normally I would say the good and the bad and the ugly, but there's a fourth person there, Todd, who's younger than all of you together. And I'm not going to call him beautiful, but anyway, moving on. Todd, best wishes for tomorrow. And I think that you've tapped into a very strong area in Europe in terms of Finland. And our best wishes for that. Peter, good luck. And you've got a big thing to come on, so we'll see how we go tomorrow. But look, fundamentally, we've all talked about ESG, carbon, decarbonisation. We're all going, yeah, it's all good, we're going to do it. Tony, your sign is about to hit you on the head, so maybe you want to turn around and push it back. But the bottom line is, though, and the question really is, how do you all feel about Asia? Because fundamentally, Indonesia nickel is what's going to change the next goalpost, because we've had, I was talking to Dom earlier on about the major thing in my life in nickel is the laterite nickel pig iron. That was the biggest thing in nickel that changed the pricing structure and availability for stainless, and then now we've got EVs. So the question to me is, with the political background we've got now, which is somewhat anti-China, how do you think you're marketing, or what is your strategy to basically say, we are going to market into Europe, we're going to market into China, or we don't care, we'll just market globally. Because I think it's a question politically that we're going to get asked all the time. And I, as a CEO, is limited, but I'll just share my political views. But I don't think we can walk away from Asia, because that's the hub currently, whether you are Chinese, Tesla, VW, Mercedes-Benz, or whatever. Because as I reflect back on cigarette companies and oil companies, they toe the line in the public eye, but they don't really care where they invest, because they want money for shareholders. And that's what all the directors they care about, right? So anyway, so over to you guys.
Do you have to pick a side then?
No, it's all about what the global demand is going to be for nickel, and how we fill that gap. And I think where Indonesia is really, really important is that's the only visible new supply coming that is going to get us close to filling that gap in future nickel supply. And I think it would be a very sorry story if we didn't have that new nickel supply coming on in Indonesia, because the nickel producers would be applying the handbrake to the whole electric vehicle evolution. And if that happened, then the rocket scientists who designed the batteries would just design nickel out, because they had no faith in the supply. So we do need Indonesia. I think people will look at Indonesia primarily as a source of nickel in pig iron for stainless steel, and then we'll get some emerging nickel units as nickel metal and as nickel sulfate for electric vehicle batteries. I think across the OEM space, some will gladly use that because it'll be what they can get their hands on. Others have sat in front of us and said, we will not take nickel from Indonesia. And we can only take OEMs at face value, but their story, from an ESG point of view, they don't see Indonesian nickel satisfying their ESG requirements.
Yeah, I think there's certainly major challenges, with taking Indonesian nickel into the battery space. I mean, obviously you need to have the highest purity nickel, class 1 nickel, and there's, going to the stainless steel market, it certainly fills its role. In Europe, we're very aware of that, and nickel sulfides into the OEMs is going to be critical, that it comes from traceable sources, and it's from, development that, is sustainable as well. So it's going to be part of the challenge, I think, and you can't ignore it, but it's also part of the mix for us.
Great, thanks, Dan. And good luck tomorrow.
And thanks, Dan, for the congratulations. Hopefully it goes well tomorrow.
Yeah. No.
This follows on from that question in sort of a way, and we keep hearing about the increase in demand for battery metals. And Peter, this is directed to you because you've got more exposure to some. And the crunch is coming later this decade. Peter, with your bank of analysts, do you believe that crunch is coming? Do we have a supply-demand inequality there? And do the OEMs get it?
Yeah, I don't think they broadly get it yet, because they come from a historical background where the widgets they need are going to be in the cupboard within 5 kilometres of the factory, and getting your head around upstream mining, the whole exploration, mine development, operations process to deliver the raw material. I think that that's certainly a big learning curve for the OEMs generally. Aspects of that, I think they've taken a strategic view on. So I think you see many of the OEMs have already invested in the lithium space. I think people get it that you call it a lithium-ion battery for a reason, so therefore you need the lithium. People are perhaps not as aggressive from a strategy perspective in securing the nickel units that they need going forward. And irrespective of whether it's lithium or nickel, if you take projections for electric vehicle growth going forward, and if you use Bloomberg New Energy Finance, they're projecting 27% compound annual growth rate through to 2030, and that's fairly modest given that in the rear view mirror the last 10 years has averaged 49%, so we've got a flattening of growth. But even with that flattening at 27% compound annual growth rate, we don't have enough visible supply of lithium or nickel to satisfy the lithium and nickel that's required for electric vehicle batteries. So it's going to be a real problem, but we as an industry shouldn't think of it as a problem. We should think of it as an opportunity, and it's an opportunity for all of us to get our skates on, do the exploration, find the mines of tomorrow, and then get them through permitting and studies and into operations.
Great, thanks, Brett. We've got time for one more question, as long as it's only 10 words or less.
Thank you. Rosia from Stampede Innovation. A follow-up question on what you just mentioned. Obviously, reserves for lithium and nickel are not there for for the growth that we need. One of the things that have been mentioned is recycling. So can you elaborate? What do you see? Do you see growth in that market? And how do we make that step?
That's a great question.
Yeah, and that'll certainly be a key part of the supply chain in the future. And the stats that I talk to, and we don't generate the stats. We rely on the experts out there that have that are doing the research to understand it. The recycling is incorporated into the numbers they generate for the supply side, and of course, the recycling for nickel is a little bit more mature than it is for lithium because you've got recycling of stainless steel, and then going forward for both lithium and nickel, you're going to start to get recycling of batteries. To get to that point, you've got to mature the electric vehicle pipeline a little bit, and get enough critical mass of spent batteries to actually justify a recycling business. But where we see a real opportunity is the opportunity to combine some of that recycling with the downstream, and you effectively make chopped up batteries or battery cathodes part of a feedstock into, for instance, a nickel sulfate facility.
Yeah, there was a report by the European Metals Association that was put out a couple of weeks ago. At the moment, it's around 6% of nickel is recycled from spent electric vehicles. Obviously, it's batteries that from manufacturing didn't make the cut or whatever, so very small proportion. And as Peter said, the factor in terms of the volume of nickel deficit that we're facing it's all takes that into consideration. But the projection by 2040 is they're expecting around 45% of nickel in Europe in particular to come from battery recycling.
Yeah, I think if you see a company like Neometals at the moment, Chris Reid are doing a remarkable job in defining that process and that market in particular. Well, unfortunately, I'm sure we could talk forever, but we've run out of time. So thank you very much. It doesn't mean you have to leave with plenty more time for networking, and glasses of wine and beer will still be, and coffee will still be flowing around. But I think we should give our panellists a break. So can you just please join me in thanking our panellists, Peter, Victor, Tony and Todd. This panel was live streamed this afternoon, so I'm sure there was plenty of people around the world watching it, and it'll also be available on the Paydirt TV YouTube channel over the next couple of days. There'll also be coverage of the discussion in the July edition of Australia's Paydirt. Thank you for joining us again today. Next month, we're back with another Paydirt Unlocked. It'll be our 2-year anniversary next month, in fact, of these lunches. The topic we'll be unlocking next month is Africa, sponsored by one of our guests today, Cobus and Axis. So thank you very much for that, Cobus, and please join us again. We've got a fantastic lineup of panellists for that one. Of course, as Bill mentioned, this isn't the last time we'll be talking nickel this year. We have Australian Nickel Conference coming back for a 28th year, I believe, in October, and I believe all of our panellists are signed up for that one already, and I would hope that most of you in the room already are as well. If you haven't, Paul will be at the entrance as you leave with your registration form, so make sure you sign up for that as well. So thank you very much. Please stay and enjoy yourselves, and we'll see you again next month, hopefully. Thank you.